first of all, Amrita, how should I view this? Do we know whether Iran was really to blame? And if it was, are we going to see a 1980s similar, tanker war brewing?
I don't think there's any conclusive evidence that Iran was to blame. I mean, clearly, political tensions are ratcheting higher given what the U.S. has said. Even Saudi Arabia has said this is a significant escalation. So obviously, the tensions are very, very high. Iran has denied of the allegations. And also remember, these could be other groups in the region that have carried out the attacks. We just don't have enough proof right now.
What's your take on, the price of oil, James, and actually the impact this has on, I don't know whether it's your modeling or whether it's just like geopolitics impacting equity prices?
I think that we will see volatility in the near term, but I still think that the medium-term outlook for the oil price is down because I still expect global supply to exceed global demand. And this is, for me, a ripple in the waters rather than anything more substantial.
Amrita, wonderful to speak to you again. What is the supply-demand dynamics right now in the market as we try to find price? We're talking to different oil strategists, and I'm seeing a new study of supply. Are we ignoring the demand dynamics?
I think, if anything, right now, the main dynamic is demand. I mean, look, supplies have been tight this year because of OPEC. Iranian exports are virtually close to zero. It's only 100,000 barrels per day in May. They haven't been able to sell most of the stuff that they loaded. Venezuelan production is down. Russia still has contaminated crude. Supply isn't the problem. Right now, the fear in the market is that we are heading into a recession. Demand numbers have been coming in weak. There's no two ways about it. And that's why prices have been coming off despite geopolitical tensions.
I haven't got the Google Maps out yet, Amrita, to figure out the distance from the Permian Basin to the Straits of Hormuz. How does oncoming oil from Texas and Oklahoma affect global price if the issue's in the Gulf?
Well, I think it is going to do with shipping insurance, right? If that region is deemed to be risky, insurance premiums are going to go through the roof. And any oil, be it from Europe, be it from the US, that is going to transit that area towards Asia, that's where the problem is going to be. Prices are going to rise as a result of that. Freight rates are going to rise. Refiners will have to pay that up. Or they need to take a much longer route through the Cape or via the Cape of Good Hope, and that will just increase sailing time significantly.
I was going to ask about that, Amrita. Actually, can Saudi Arabia divert some of its energy exports, elsewhere?
It could. I mean, they have the East-West pipeline that's underutilized right now. They only supply their Western refineries through that. So yes, you could potentially get a bit more through the Red Sea, but the terminal capacities there are half the capacity on the other side, right? So it's never going to be a one-for-one. Yes, they could divert a little bit, but ultimately you can go around the Cape of Good Hope. It's just that it adds days to your journey, and it's never going to be ideal because costs are going to go up as well.
Amrita, do you think the Saudi-Russia alliance in OPEC actually holds? And is that really the only thing that the oil experts care about?
Right now, yes, within OPEC, or OPEC Plus, I should say, that is the only alliance that the market cares about. I think it does hold for now, again, given where prices are. I do think even though Russia is more comfortable at these prices than the Saudis are, Saudis clearly need a higher price. Again, judging by what Novak has said and Putin has said, I think the alliance will continue. Our sources say the same thing. Now, if we were $10 or $15 higher, I would say Russia is going to push much more for an increase. Remember also, their pipeline is still contaminated, so they can't increase production very quickly anyways.
Amrita, what is your call on oil? I want to pin you down on a 12-month view. What we're seeing from most strategists now is an adjustment, stable, and a weaker oil price. Do you agree?
Mm-hmm. I would say if demand is genuinely a concern and we are heading into a recession, I do think there's downside risk to prices. Otherwise, if supplies are where they are right now, and we expect supplies to be very tight in the second half as well, despite U.S. production growth, then I think prices will climb back into the 70s and stay there through the second half.
Interesting. What are the degrees of freedom that Saudi Arabia has? They've got a fiscal nut they've got to make every year on price. What's the sweat level in Riyadh right now?
Well, it's pretty high. I mean, they definitely, other than the fact that it's also 50 degrees right now over there, it's a heat wave. But I do think they are aiming for, or they were at least aiming for high 70s for their budget this year, and they've been nowhere close to that. We've been in the low 60s for the first half of the year.
Amrita, how do you think demand is holding up? If we look at a global downturn, if demand wanes, could that be, a cause of concern?
I do think so, yes. I mean, if you look at the demand growth numbers this year already, we've always been below consensus at 1 million barrels per day. Right now, we're tracking about 900,000. I think, look, anywhere between 700 to 1 million is okay because supplies are still falling faster than demand. If you're talking about less than 500,000 barrels per day of growth, then we will be in trouble.